Our next panel discussion is talking about how can we deep dive into optimizing cyber insurance with risk quantification. I know everybody hates paying for insurance, so it's always good to make sure you get the right insurance at the right price to cover the risks that you're exposed to. So what I'd like to do is I'd like to introduce the next panel. The moderator is Christopher Khadan, Chief Customer Officer at Safe Security. We also have Leopold Larios, Director of Cyber Insurance Offering at Descartes Underwriting. Andreas Schmitt, Global Cyber Underwriting Manager at Zurich Insurance. Thierry Zucchi, who is Head of Cyber Activity at Relyens. And Patrick Montagner, Deputy Secretary General of ACPR. If you'd come to the stage, and we look forward to hearing your thoughts.
Thank you. My name is Chris Khadan. My name is Chris Khadan. I'm the Chief Customer Officer for Safe Security. I'm really looking forward to this conversation today on cyber insurance, primarily because a few of the questions we keep getting asked from customers in the market is, how can I appropriately plan for cyber insurance? Second one that we get quite often is how do I rationalize coverage against my needs? And then the third most common question is how do I really optimize my program in order to maximize my benefits? So I'm really looking forward to having that discussion with this panel of experts, and hopefully we can address some of those questions that's coming from the market. So with that, what I'd like to do is maybe have each of you introduce yourself, and as part of that introduction, briefly, because I know this could be a long topic, give your perspective on how did we get here? How did cyber insurance became a product offering in the market, and why? So maybe we could start with you, Patrick. Yeah.
I'm not sure. Yes, it works. I'm not an insurance company, to be first. I'm a supervisor for insurance sector. So my main task is to be sure first that the offer of cyber insurance is safe for the insurance sector, that they understand the risk, that they can be sure that the quantification of the risk is correct without putting at risk the whole balance sheet of the insurance company. My second concern is, of course, the fact that without a good cyber insurance offer, we have a gap in the global economy, and this gap is damaging the economy. So we try to build up to have something which is acceptable for all parties. And I would like also to say that, for instance, EIOPA, I am the French representative at EIOPA level, the European Agency for Supervision for the insurance supervision, has launched a survey for SMEs about cyber insurance. So you can still answer until the 20th of March. So you have 1 week if you want to answer, because, of course, the fact that we could have a lack of and a gap of insurance offer is also a concern for the insurance supervisor, because our main goal is, after all, to protect policyholders, not insurers. After that, I have a lot of things to say, but short.
Good afternoon, everyone. So I'm Thierry Zucchi. I'm the head of cyber risk management at Relyens. For those of you who don't know Relyens, this is an insurer, pretty old company, 100 years old company, headquartered in France. Started with MedMal So for the ones who know that, we basically focus our business on the healthcare industry. That's what we've been doing, again, as I was saying, for more than a century ago, for more than 100 years. We've been transitioning from being an insurer to also extending our footprint into the risk management. Hence the fact that I'm in charge of the cyber risk management. So that's in a nutshell who I am and who we are. With regards to cyber insurance, basically the story started more or less before COVID. I was not yet there at the company. I joined the company a year and a half ago, by the way. And back then, we did a survey, a sort of a study, and we discovered that the hospitals, not only in France, but also in Spain, in Italy, and in Germany, where we're doing operations, were pretty well exposed to cyber criminality, and unfortunately for them, they were not necessarily that ready. More than 75% of them were not at all ready, and they didn't have the necessary maturity. So from that perspective, they were not insurable at all. So that was a big issue, because for them, but also for us, because we were planning to, obviously, to develop such a business. So we had two options. Either we would let them in their situation, facing this risk and waiting maybe for years so that they would roll out prevention, solution, and remediation technologies, or we would be proactive in addressing these risks together with them and helping them in somehow transforming their exposure and their posture. And guess what? Relyens management decided to go for that second scenario. And then we somehow, applied our risk management framework for that risk. So pretty much doing more or less the same as we do for other risks that are also, they are within the hospitals, and we apply this methodology to the cyber risk. It's pretty simple. I won't bother you with all the details of that, but it's a three-pillar risk management framework, which is based on what we call steering. In French, we call that pilotage. So where we basically do the assessment of the risks, we also do quantification. And we end up in having understanding of the risk exposure. But not only that, we also have a good understanding of the hospital's vulnerabilities, and we also do recommendation. So that's the first step. And as you can imagine, this is where we leverage risk quantification. And here we use the Citalit platform, and we mainly work with the CISOs to do that. And ultimately, the CISO have a very efficient way not only to understand what would be their exposure in the case of a successful cyber attack, but they can also mobilize the management so that the management would also understand what would be their exposure. So typically that's a way for the CISOs, for us, and also for the management to have a common understanding and to ultimately make the right decisions and mobilize budget. Second step is the prevention. So pretty easy. We identified in the previous step the vulnerabilities, then we would obviously remediate those vulnerabilities by rolling out technical solutions, so typically remediation solutions. And by doing this, we would then reduce the risk down to a level that would be somehow acceptable for a transfer. Okay, so typically remediating this to what we call the residual risk, and this is where the third step would step in other words. So last but not least step, the insurance. So pretty straightforward here. So we have our own insurance product, and with that we can obviously take into account this residual risk, and ultimately absorb that risk. Typically, what wouldn't necessarily be addressed by technology, and that's in a nutshell what we do. So basically to the question, pretty simple. We are just at the beginning, and obviously here in the third step, we also plan to use quantification. It's not yet there because it requires some development. As you can imagine, we already have, our own, together with actually our insurer, we have our own way of pricing cyber insurance policies. But here the idea is to fit that process and that calculation with the quantification moving forward, so that ultimately we would be able to refine and to understand further the risks, so that ultimately we would be more competitive in addressing and proposing cyber insurance to the market. Okay.
Thank you, Thierry.
Yeah, thanks, Thierry. My name is Andreas Schmitt. I'm the global head of cyber underwriting at Zurich Insurance. My focus area, so to say, is the cyber strategy for Zurich Insurance, but also setting the risk appetite for Zurich in respect of accumulation, but also in respect of underwriting, and focusing jointly also on business development. And to your question on cyber insurance, how it started. So I think the start of cyber insurance was in the late 90s, coming from the US, more focused on data breach, and over time evolved into a more, I would say, first party, third party, but also service driven product. So it's a quite unique product. And we as Zurich are fully committed to cyber, because we believe we also have a responsibility for, on one hand, the biggest risk of our customers, to also provide sustainable solutions. And for us, sustainable solutions are not only risk transfer. We're putting cyber resilience in the center of our doing. That's why we're offering combined risk transfer and cyber resilience services via our Zurich Resilience Solutions. And putting resilience in the center, having a workforce of around 130 people on underwriting and risk engineering. We also enhanced our underwriting and risk assessment capabilities recently, and will also, going forward, have an offering for, as I said, insurance and services, but also with risk quantification, and also with an impact. What means if a client is further investing into security controls, into further security maturity, what is the impact on the possible maximum loss, but also what is the impact on the insurance offering itself. So a clear commitment to cyber from Zurich for those risks where we believe we can quantify, and definitely much more than just risk transfer, putting resilience in a joint offering in the center and strengthening our capabilities in-house, but also with partnering effective going forward. Pankaj at Safe Security. Thank you.
Hi everybody, I'm Leopold. I work at Descartes Insurance. We are a new insurer. We design an in-house model in order to assess and to quantify the risk for industrial and manufacturers. It's the first cyber insurance designed for this kind of industry. We cover two main areas. One is about incident and response costs, and the second area, it's about business interruption due to the cyber attack. Descartes is a specialist of parametric products. We have more than 100 data scientists, data engineers working on models. And what I can share with you, according to the previous panel, is that definitely, yes, it's so important to care about the dimension of the impact of the risk mapping. Impact can be on operation first, obviously, finance, reputation, but also we all agree about regulation and compliance regarding GDPR, regarding NIS2. And I think these two elements, even if, to be frank with you, as former risk manager, I consider that compliance, it's when we, as risk manager, we fail in managing the risk, because that means the regulator forces us to do things. But at the same time, I must recognize that, unfortunately, how many times I've seen a drastic change in the attitude of the C-suite regarding such risk, especially cyber, because of GDPR, because of NIS2, because when you must pay up to 4% or 2% of your total revenue of your group, it's a real pain, it's a real issue. And at this moment, to be clear, regarding cyber investment in your cyber defense, it's a free ticket. At this moment, it's a total game changer. So that's why I consider that quantification is really important. We all need your activity, and I think it's really important for us as insurer, because it helps us to provide insurance, because the people are aware about their potential exposure.
Thank you. Thank you, Leopold. So switching gears a little bit, Andreas, you talked about the underwriting process. Many of us are not really exposed to that from an external standpoint. So maybe walk us through a little bit about what that looks like and what's required. And if you can, give a little bit of context for from a customer standpoint, what's good, better, and best strategies to like take advantage of the offerings that your institution provides?
Yeah, thanks, Chris. And I was inclined when Nick had his opening speech this morning and focusing on insurance just on an outside-in questionnaire-based approach. And underwriting, I would say, is a bit more than a questionnaire-based approach and outside-in, from a Zurich perspective at least. And if we believe, looking to the recent years of ransomware, there was definitely an increase in or inflation in respect of questions asked when it comes to cyber insurance. And we as Zurich did a complete revisit last year. So we had focusing on 4 market segments: micro SME, SME, mid-market, and large corporate. What do we believe with our experts are the must-have questions, not only from a yes and no, also with comments? What is the most important question per market segment, but also putting the exposure behind to understand on one hand the risk, to understand the risk quality, but also to understand the exposure. That's why we have a differentiated approach from an underwriting point of view. Yes, it's a questionnaire-based approach, but also with expertise from underwriting and risk engineering, and also on a certain segment like upper mid-market, large corporate, including a risk dialogue with policyholders. And having this focus on the question what matters for various purposes, so risk quality, exposure, but also to understand what is the dependency on IT, what is the dependency on outsourcing, what is the whole topic of supply chain, and also aspects of legacy systems, specifically for OT and things like that. So it's more a holistic, not only focusing on security controls, because that's just one part of the aspect. So we're focusing really on risk quality, and the exposure. And we also developed a PML model, possible maximum loss for cyber, you would call it from a loss event magnitude. And the big unknown is definitely the loss event frequency, but at least we started also to give some more guidance into underwriting to also challenge the pricing model, but also having a bit of more idea where the exposure is, and then having further discussions with clients and derive it over time. So yes, from an underwriting point of view, it's a questionnaire-based approach across all market segments. It's when we come to mid-market, large corporate, it includes also risk dialogue, and we will change again this approach, or not change, but we will enhance our approach to a more holistic underwriting and risk assessment, because we believe data is the fuel of the digitalization, and we should make use of data. Also, what the lady from GSK, I was impressed with her presentation, but that's exactly also the way we are going forward. So we are combining our underwriting and risk assessment, as I described before, with an outside-in scan, with an inside-out scan, and then coming to an subjective criteria to risk quality, and also based on that, deriving with the support of the vendor I mentioned before, also with the fair chem, a risk quantification, and we intend to provide also our policyholders with a report as part of the quotation, what we believe is the current level of risk quality, what is the risk quantification on various risk scenarios, but then also not leaving the customer alone. We also introduce with our Zurich Resilience Solutions services, on one hand risk quantification services, but also we are building an ecosystem, because knowing where the possible or then probable maximum loss is, also how you can reduce it, what kind of investment is required, and that's why it's a combined risk transfer and service offering, where with the financial impact, you also have a better decision basis for the C-suite to say, okay, if I invest further into certain controls, how does it affect my probable maximum loss, but also what kind of my risk is still unprotected, because from our point of view as Zurich Insurance, cyber insurance is the last layer of defense. And if you look about assess, protect, detect, respond, and recover, the last layer of defense is certainly cyber insurance, which closes the gaps on all previous layers. But if there's an opportunity to also increase the risk level, the security maturity, that's why we put resilience in the center of our doing. Because then with the cyber insurance plus services, we also comply with our responsibility to make this world a safer cyber place. Thank you.
Thanks, Andreas. So, Leopold, I want to come to you now, because you have a unique background and you were in risk management before. Why is compliance by itself not good enough? And you're seeing this shift towards adoption of quantification and its applicability to even insurability.
It's a tough question. Perhaps one point is missing in compliance. It's about the means and the resources that are needed to be involved in doing this compliance. It's one point to say, okay, if it's not done, the fine will be this size. What should be also helpful is to say, okay, about the resources that you should gather, what are the potential needs that the teams should have, and what are the resources needed in order to meet this compliance. So it's probably one of the aspects that we will, I wish we will see it in the future. And yeah.
Thank you. And Thierry, as you look to adopt quantification, how is that helping to influence the different offerings or expanding the different offerings that your institution provides to the market?
Trying to rephrase the question. So, I mean, is that about the pluses or the benefits for the customers?
Benefits, yeah, more on the benefit side.
So, I mean, there are benefits for Relyens as the insurer, and there are also benefits for the hospital. So, typically our customers. With regards to, can you hear me well, by the way? Yeah. Okay. So, for Relyens, as I was saying before during the introduction, we're facing a pretty tough situation, having, I mean, a very low number of customers insurable. So from that perspective, obviously, risk quantification will help because, as we've said, it helps in mobilizing budget and therefore reducing the risk. So ultimately, it helps the CISOs to remediate their risk, to change their posture, and ultimately to becoming insurable. So from that perspective, it's a benefit for us because then we have a bigger market to address, okay? Second benefit for us, obviously, it helps us in understanding further that risk. We've said that many times during the sessions before, we still don't know that much about that risk. That includes, I mean, Relyens as an insurer. So from that perspective, it's going to give us some data points because even though we may not necessarily insure a customer, by doing this risk quantification, we get information about their posture, and we get in return of the quantification an exposure that is a financial exposure. So those are real data that we can collect, that we can aggregate, and ultimately that will feed us moving forward in understanding further and refining or I mean, insurance, I mean, quotation process. So it's definitely variable from that perspective. And last but not least, for Relyens, I mean, and it's not really that obvious, but believe me, it's true. It gives us, I mean, responsiveness and scalability, meaning that we can do, I mean, I only have one risk manager per country where we are. With one of those guys, I can do what a consultancy company would be doing with many consultants. So in other words, instead of doing, you know, an audit, security audit that would spend across weeks, in just a few days via a questionnaire, we would then collect information about this hospital posture, and in a click, we would then end up in having this quantification. And in a second click, we would then end up in having their vulnerabilities and associated recommendation. So it's very, very efficient from that perspective. So it gives us not only the scalability that we would need, but that the customer would need as well, because especially in the hospitals, and I'm pretty sure that you would agree on that, hospitals are lacking in resources, not only on the medical side of the house, but also in security. So it's really critical. So from that perspective, it's also very efficient and obviously lighter and almost for free. Okay. So from that perspective, it's really really cool. So it's also a benefit for the customers. And if we look now at the hospitals and the CISOs, obviously it's definitely a benefit for them, because they not only have a financial quantification, but they can also simulate. So they can play with the tool, and they can apply as many prevention solutions as they want, and quantify the impact on their exposure, and therefore they can prioritize the rollout of those solutions, either with regards to the budget that they may have, or they can even go and meet again with their management, ask for more budget, because the return on investment for such a solution would be higher than this one. So it's very, very powerful from that perspective. For the CROs, so for the chief risk officers, there's also a very interesting benefit here, especially for the big groups of hospitals, whether they are private or public. Think about, I mean, a group that would have 150 hospitals. You can imagine that among those hospitals, they would have diverse maturity levels. So from that perspective, understanding who are the weakest ones is very interesting. So if you would have to do that via an audit, it would take ages. While typically here, if you look at peer hospitals, and if you do a quantification for each and every one of those peers or those groups, then you can end up in having a clear understanding of all of those groups and identify the weakest ones. And this is where you would put your energy, and you would focus your remediation plan, because, as you know, the weakest point would be defining somehow the level of maturity of the whole group, because they are all interconnected. Okay? And obviously, a hacker would be focusing on those ones. So from that perspective, it's also very interesting. And last but not least, for the CFOs, I mean, basically, it gives them a tool to somehow challenge the insurer, because ultimately, at the renewal time, if we would go for an increase of the cyber insurance policy, and if they would have somehow an information from their, quantification tool that would say the opposite. So basically that, their exposure would have decreased from last year, then they could go and meet with us and argue that, such increase of their policy wouldn't necessarily be that justified. So, that's also very interesting. Not necessarily interesting for the insurer, obviously, but typically at least a way for the customer and ultimately for the two of us to agree on a common understanding of the risk and ultimately of the policy.
Thank you. So real quick, good segue in terms of you brought up the role of the CFO. And typically, Patrick, would love to get your input if you'd like to add. Traditionally, the CFO or board of directors were largely responsible for insurance of a company. How are you seeing like CISOs get involved in the process, and how can that collaboration work? If you can add to it from your perspective, and then I'd like, Andreas, your opinion on it.
I'm not sure to be able to answer to you, because in this case, I also cover, of course, the own risk suffered by insurers, because they have also their own cyber risk, because unlike other firms around the world, they can be attacked. So in this case, we have some very detailed expectations about what we are expecting to see by the CISO and the level of safety, because of course, given the huge role of this financial industry, both banks and insurance, because ACPR is responsible for both bank and insurance supervision, we need to be sure that they are always able to function very, very well, given their role in the economy, because it's worse for the banking sector, because of course, given the huge flows, daily flows of money every day in their system, it's very vital for any modern economy, but it's still true for also insurers. So that's the point when we are trying to deal with the cyber risks for insurers themselves. After that, trying to look at the customers of insurers, of course, we are sure that the prevention part of the insurance contract is something which is very important. It has been done for everything, even for fire on property. You have a lot of things to do as an owner of a flat or a house to be sure that to be covered correctly by your insurance, you have to protect, for instance, against theft by sometimes some additional protection and things like that. So for the cyber, we are sure that the role, and it has been explained by three insurers with different business model, different size, because between Zurich and Descartes, it's just a huge difference of size. Of course, a very specialized business model on hospital with Thierry. No, Thierry, yeah, that's true. But for us, what we expect to have from insurers is to be sure that we don't have, and we have issued a press release on Monday afternoon, to be sure that the contracts are clear, what is covered, what is not covered. And the worst for us is silent coverage, because we never know what it does mean. When we have a claim, is a customer covered or not? It's unclear. Has the insurance company understood or not that she has offered a silent coverage? Unclear, and sometimes it can be very painful. So we think that we need to have a very clear contract, insurance contract, and to be sure if it's only the first, what we call the first party which is covered, or also the third party, because sometimes you have customers which have suffered some losses because of your attack and things like that. So everything must be very clear, described in the contract, and also sometimes quantify. Maybe the insurance company is able to say, we cover with a stop loss of a maximum of. It's possible, but you need to that clear. And that, of course, for a CFO, to be sure how they can manage an insurance contract with their own system, etc. It's very important to manage your risk as a firm. So for us, we try to encourage the insurance industry to offer clarity to the contract, to also clearly say if business interruption is covered or not. Because clearly, that's the main cost we have seen until now. Of course, we can have physical damages, fire. You can also have sometimes people which can suffer, and physical people. But the main cost is clearly the business interruption. So do you cover the business interruption? How many days do you cover it? Do you have a maximum, a limit for that? So that's, in this case, we think that if we have clarity in the insurance contract, it will offer the customer and the policyholders a better way to manage efficiently their own risk. Without that, you are still in the dark.
Appreciate it. I'm getting the wrap-up signal. Maybe we have a chance for one question from the audience, if there's any. Okay.
Thank you. As insurers, do you see once a company gets in cyber insurance that they, let's say, rely on it and don't pay attention to the hygiene? Quite a provocative question. Do you have any analysis on that?
I would say it's the other way around. I mean, if we take policyholder and insurer as a partnership, and as I said before, cyber insurance should be the last layer of defense. So we are not seeing a decreasing level of risk management. It's rather from a partnership, also jointly trying to foster resilience.
Yeah, and I would add that due to the LOPMI, in France, for instance, within the 72 hours, you must declare the incident to the cyber.gouv.fr. Nobody likes to do this kind of thing, so that's why they will care about their IT in order to avoid such aspects. So I do not see any reason why an insured should behave a little bit differently because he's insured, yes or no.
All right. Well, we'll wrap on that. I know we only had 30 minutes, and this is a major topic. So would love to continue the conversation in different forums. But really, thank you to all four of you for participating. I think it was great sharing your insights, and I'm sure the audience found it to be useful as well.